Company featured. Welcome to this Stockbox interview. Joining us on Stockbox today is the CEO of Power Metal Resources, Paul Johnson. So Paul, you're joining us today on a rather red day in the markets. How does it make you feel when the markets are like this during the day?
Oh, yeah. Well, I think it's days like today that these interviews should happen because you see a lot of them when share prices are bubbly and buoyant and directors are happy with the world. We're fine. As a business, we are progressing incredibly well. We feel very confident. We feel very happy with what's been achieved so far in our plans and our execution along the way. But we're frustrated, as with other shareholders, because board members hold the shares. The team members have options, and we want them to make lots of money from those options as quickly as possible. So these down phases in the market are tricky for us all. But the important message is we are pushing on, and we are super confident in what we're doing. And whatever the market conditions, that will be the case.
Okay, good. So on today's interview, we did put out a tweet on Stockbox to ask any investors if they'd like to ask you questions. So that's what I'm going to do now, is put those questions straight to you. My job is nice and easy on this interview. So the first question, do you agree with Mark Twain's adage that a mine is a hole in the ground with a liar at the top?
Well, yeah, that quote was attributed to Mark Twain. And I think the quote is, a gold mine is a hole dug in the ground with a liar atop. And I think it's a fair question, actually, because we do live in a world with the junior resource companies where people do lose pretty large amounts of money across the space over, a market cycle. And it's important to be really careful and judge very carefully through research and proper investigation the quality of the investments that you're putting your money into, and of course making sure you're not over leveraged in a stock or inadequately diversified so that you have too many eggs in one basket. It's maybe not a question for our business because we're not in the mining business. We're in the exploration business. That's our focus, and corporate work related there too. So we don't really trouble ourselves with, major holes in the ground at the moment. We're trying to find major deposits, and through exploration work and many and varied techniques to do that. But caution is always the number one thing in our business. Be very careful with where you put your money.
Okay. Now, does Paul foresee the continuation of the hub and spoke model using solely local teams on the ground for current projects, or are they likely to change their current processes as travel restrictions continue to ease?
Oh, right. Okay. Well, traveling in our business was always a necessity, and I think to a certain extent it still is. I don't think you need to go repeatedly to a single project location. I think it's good to visit and to have a look at the projects on the ground, meet the people, get to know the personalities, because it helps you in the liaison thereafter. We have learned that the hub and spoke model works I would say exceptionally well, with some caution along the way. You have to make sure you're with the right teams. You have a good degree of confidence. There has to be a good information flow. If that information flow breaks down, then you can start to lose track on what's happening. You can start to lose control of cost and all that kind of thing. So I think we will keep the hub and spoke model running in our business. I think it's worked very well for us. As the travel comes back, I think we will start to do more trips out to the field. But we'll be sensible with that. As a business, our direct expenses bill is minuscule. I mean, mainly in the last 18 months because you haven't been able to travel or go anywhere. But even before that, we spent, in the period from Feb 19 for the year or so after, before the lockdowns kind of kicked in. I think we spent $20,000 in total across the board for travel expenses, hotels, site visits, that kind of thing. So it was a really low level cost within our business.
Okay. Now, does Paul see the potential for strategic alliances with key REMs and key metal end users, e.g., battery manufacturers, car manufacturers?
Yeah, I think that's the way it's going. If you look at our project portfolio and what we've done over the last couple of years, we've certainly attracted lots of interest and inquiry along the way. Now, what seems to have happened is there's been a shift. There was lots of initial inquiries, coming in from various different sources as we started to build this business around the world. I sense it's intensifying, and there will be a lot more of these organizations starting to engage with companies such as Power. Now, of course, it helps if you get those big exploration discoveries, because then you really do have something that people want to get involved with. But I think even in the earlier exploration stage, we will see more alliances happen. And as a business, we would encourage them. So, when we get interest, we engage. That interest, I think, will intensify. And I think we will start to see partnerships emerge in our company as we push forward.
Okay. Now, do you feel that there is resistance within the industry and market to POW's business model in terms of the spin-outs and good investor communication? And does it frustrate that the portfolio isn't potentially reflected by the market?
Okay. Resistance, I think, yes, there is. And that resistance is two types. One is that you are, in our business, we are marketing a new message to the investor base out there. It's not the typical AIM Junior with one or two projects, big central cost base, not much work being done, only a modest amount of communications, because that's been the state of our market for a number of years. It's been difficult to raise capital. It's been difficult to do lots of work. And costs of running, listed companies are not cheap. So, to stay alive, many companies have to focus on corporate cost, and they have less ability to invest in exploration. Now, we have an advantage because we have one vehicle at the moment, and we're developing our projects through that one vehicle. So we can take all of our projects that one or two steps forward before they get spun out, or before we, really start to invest heavily in them. So this model that we have works for us, but we do have to communicate to investors and explain what we're doing. Is there resistance in the market? Well, I don't think so generally. I think there is a positive response from the marketplace in general. If you consider the advisors, that we engage with, you consider the institutions that we talk to about what we're doing. I think there is a need in London for a number of new vehicles in the junior resource space. There are not many vehicles for any one sector. Look at uranium, for example, and the number of options there. Look at North American exploration projects, not a great deal. Look at Canadian exploration projects, not a great deal. Australian focused vehicles, there's some, but there's not a huge number. So I think there's many gaps that could be filled by companies such as ours, creating these packages and then putting them into the market. I do think that it's a good thing when you bring a new model and you have to fight for the attention and you have to really demonstrate what you're doing, and we intend to do that. Valuation wise, we are governed by the market, and at the moment the market thinks we're worth £23 million. Okay, now my own opinion about that would suggest a different level of valuation, but it doesn't matter what I think. I have to engage with the market and drive the valuation up as I move forward with the business. And I think we've got potentially tremendous amounts of upside potential.
Okay. Well, that does lead us nicely into the final question that was sent in today, and that is, could I please ask Paul that if POW are spinning out multiple assets, possibly 6 was mentioned, will POW keep an interest in each of these assets so that the share price of the company is not affected adversely?
Okay, so if we had one spin out and it was very substantial, then that's trickier for us, because people would look at that spin out and check its valuation, and our value may, wax and wane depending on what that spin out vehicle is valued at in the market. If we have an approach where we're looking potentially to spin out multiple different packages into their own vehicles, then each one is less significant. So that's an important thing to say, because they form part of a diversified investment portfolio after the spin-outs have happened. Now, we have to make sure that the home vehicle power, which is the driver of all this spin-out kind of work, does not depreciate in value whilst these spin-outs are happening. Of course, we want people to buy into these vehicles when they're on the market, because that helps the value of our investment. But we don't want them to buy into these vehicles, damaging the underlying valuation of power in the centre. So it's a tricky balancing act, but it's one that we're very switched on to get the message right and balanced. Now, will we keep the value? Yes, we will. Initially, we will. Our intention is to spin out vehicles, and when they're spun out, they become an investment and they sit on our balance sheet. For a period of time, in some of the spin-outs, we wouldn't be able to sell them anyway, necessarily because of perhaps restrictions for a period when we have to hold. But we will build up our balance sheet using these spin-outs. And that could be quite lucrative for us if we get this right, because if we spin out a package at, say, a value to Pow-on IPO of £3 million, just to make up a figure, and the vehicle goes up 3 or 4 times in the market because it's primed for success and it's ready to drill and all that kind of thing, then we could see an asset worth £10 million plus on our balance sheet. So we're obviously keen to build as many of those as we can, put them into vehicles, get them on the market, build up that balance sheet value. That gives us an inherent financial strength. And there will come a point, we think, where we say, we have enough balance sheet strength. We want to look at distributions to shareholders as a strategy. And then we can consider cash dividends, we consider share distributions of some of our interests and all that kind of stuff. But that might be a little bit down the line, depending on how we go valuation-wise on the balance sheet along the way.
Okay, well, thank you very much, Paul. That covers all the questions that were sent in to us. Maybe just a final thought from me. On a day like today, what's the best thing to do? I mean, obviously the day is over now, but if it continues throughout the week, is it just best to turn off the monitor and do something else when these days are around?
Yeah, I've been heavily invested in the natural resource space for about 12 years. I started with very little back in 2009. And I've been fortunate to make money along the way. And obviously I have quite a large power position now, which gives evidence of that. But I think you can very easily lose your focus and lose your confidence in the markets, particularly the junior resource space, because it's so cyclical. It's almost as if the market is designed to shake you out of your positions by making you happy as the price goes up and then destroying your confidence as it gets pulled back. Very often the swings around come out of nowhere, and you can find yourself with a stock that you've traded, you've held from 1p to 3p back down to 1.5, and you think it's not going anywhere. You sell it, then suddenly it's at 4.5, a couple of weeks later. It's what our market does. So what I've found in the most acute points in my investing life, that when things get really difficult, obviously you have to pay the bills first and foremost. So if you have to sell to do that, that's absolutely fine. I've found that holding on to the positions that you retain confidence in because their business model hasn't changed or it's got better is a great strategy. I think a little bit of moving your money around into stocks that you feel have a bit more confidence or you have a bit more confidence in is a good thing. I think oftentimes people wait and they say, once I've got my money back from XYZ stock, I'll invest in ABC stock. Well, if holding to get that cash back isn't perhaps the best strategy, and moving things around a bit when things are difficult is a good idea. And just really staying calm. I know the concept is sit on your hands, but you have to remember that people have bills to pay. People need to cover costs in their life, and sometimes they have to sell. But just being calm at a time like this and doing something different, and not worrying about it too much is probably the best strategy. Easy for me to say, I know, but there's been some horrendous times in the last 12 years. I haven't entirely learned my lesson along the way, but I have learned that just sitting back, trying to keep composure is a good thing.
Okay, well, thank you very much for those words, Paul, and thank you very much for your time today, Paul Johnson, the CEO of Power Metal Resources.
Thank you, Mark.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.